Let's welcome on board Rahul Kanodia, VC and CEO at Datamatics, and ask them about what's happening in their business. Rahul, great to have you on ET now. Help us quantify this deal that you've struck. What exactly is the contract value, the implementation timeline, and of course, the expected revenue recognition as you see it over the life of engagement?
Yeah, so since we just finished the quarter end, we are in the silent period, and therefore it's difficult to give you numbers. But broadly, I can tell you that this is on the Salesforce side. When we acquired Dextara, we were typical deals were sub $100,000. Now we've got several deals that are in the range of $500,000 to $2 million each. We signed some, and there's quite a few more in the pipeline. So the deal sizes have increased substantially, and therefore we're looking at a very optimistic future for this Dextara acquisition in Salesforce. But this specific deal, because of the silent period, I don't think I would be able to specifically give you numbers. But it's a very good deal.
And is this a one-time Salesforce implementation, or does it include recurring revenues through managed services, support, AI enhancements, or future platform expansion? Can you give us some color around that?
Both. So it is a one-time thing, and it will continue with the managed services, and then there'll be add-on modules around AI and things like that. So it's a combination of both.
Morning, Rahul. How strategic is this client for Datamatics, and could this engagement lead to additional opportunities across other business units as well, or geographies, or digital transformation services?
Absolutely. Our thrust is around AI, and one of the focus areas is transport. So this customer is in that space of transport and using a lot of AI. So it falls squarely into our sweet spot. It is important because that's our focus area, and it's an important customer, on the back of which, of course, we will grow not only in this account, but several other companies in the logistics space. So in that sense, it's a strategic win.
But how does this win compare with your typical Salesforce engagements in terms of deal size, margins, profitability, and what does it indicate about your pipeline in the transportation as well as the logistics vertical?
So the pipeline in the logistics vertical is just becoming stronger as we are focusing on that, and we are getting more and more wins. This is on the higher end. I gave you the range. So this is at the higher end of that range, which is very good. It's a multi-year deal, and I think it all goes very well. Outside of this, we have been focusing on AI generally, as you know. We also launched an agentic AI underwriting solution, and since then we've got a few more deals under our belt. So that's also looking very positive for us, and it's getting good traction in the market, particularly the Western market.
And how much of this is AI-linked revenue? Would such deals typically be fixed-price contracts or time-based? Could you give us a sense?
So we have implemented AI into a finance transformation platform called Finato. We also launched the agentic underwriting platform, and now we are in the process of building an agentic AI claims processing platform as well. All these deals are getting us multi-million-dollar deals, and these are multi-year deals. So they're all very good, completely on the AI platform, and customers are responding extremely well to whatever they've seen coming from the Datamatics table.
Since you sound very bullish, does this enable you to hike your FY27 growth guidance from a high single digit, which you have guided for an organic growth?
We still have to see, because we just launched it about 6 months ago. We've got a few logos under our belt, a few more coming in. They will always start small, although it's a multi-year, multi-million-dollar deal. It starts very small, then grows. So I would take that call maybe another 1 quarter down the road, perhaps once we see these doing very well. So right now, I would stay with my current projections. But yes, in a quarter, we would be able to revisit. Generally, one does see that the market is a little soft. However, because of these AI platforms, our conversion ratios have increased and improved quite a bit. So we will be converting more deals, but the market is a little softer than what it was 2 years ago.
Rahul, but are you seeing efficiencies from AI on your output as well? And how much is AI linked efficiency currently, if you could just quantify that? And are you passing this on to the clients too?
These deals are purely AI, and AI is forming a crucial part. To your earlier question, which I didn't answer, is that these are all output-based deals. So per transaction, per claim processed, or per invoice processed, or per offer underwritten. So all of these are output-based or outcome-based. Since they're all AI driven, we are in the process of both sharing the gains with the customer and ourselves. So we are improving our own margins, plus at the same time, we are sharing some gains with the customer. So both of us stand to gain. And that's really when you have a win-win strategy, when the customer also gains and we also gain. And that's very important to be successful in the market.
Okay, Saurabh, with that, we'll wrap this conversation up. Thank you so much for joining us and giving us that perspective.